You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the vol markets? Let's find out together, shall we? It is time for Volatility Views, the premier program for volatility traders. My name, of course, is Mark Longo from the optionsinsider.com, as well as from the network upon which all of you folks have been mainlining this week. Go ahead, mainline away. There's more bandwidth where that came from. A great week on the network out there. 301st episode, spectacular, of Options Bootcamp. That was a fun one. Great pro Q&A with a frequent guest on this program, Mr. VIXologist, tackling all of your crazy vol questions. Still a little dicey about selling puts and SVIX. I thought that was kind of fun. So check out all that. You know where to go to check out all the pro fun. Theoptionsinsider.com/pro is the place to go. If you sign up there, that also gets you options oddities. And this week's a banger. I'm just putting it mildly. A lot of fun trades to talk about that we've had on over there on options oddities. So if you want to check that out for yourselves, theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us on this fine, volatile Friday. First, let's go out to the southern volatility mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir.
Hey, happy Friday.
Yeah, it is a happy one indeed, a happy week as markets rally and vol just continues to get taken out to the woodshed as we go out to, maybe he's in his own woodshed. I don't know. Let's find out. He is the once future and present Mr. Dr. VIX out in the hinterlands of Chicago, I do believe, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show, sir.
Very far west of you right now. And once again, if things go to pot downtown, you and your family are more than welcome to join us out here in the safety of the suburbs next
you were
week.
Talking about the upcoming DNC fun. Yes, it should be a good time. Yeah. Should be a good time. I look forward to having the troops on the doorstep of the studio again. Hopefully we don't get that far.
Russell, have you been following along with the Little League team?
They have. I was going to bring that up a little bit later, but the Little League World Series at 2 p.m. The team from Hinsdale representing the Midwest is going to be playing. So I used to live right across from that Little League field, they've got Mark Sebastian's jersey hanging out in the outfield.
I have my Hinsdale Little League Minor League Champions trophy in my office as we speak.
Ah, good times. Mark Sebastian, the Hinsdale Little League legend. Who knew? The things we learn here on Vol Views every week, listeners. As we keep on rolling, I think he's beaming in from Las Vegas, but I guess we'll find out. I hear it's a little bit cooler out there. It's only in the 90s as opposed to 115 or whatever. He is Noel Smith, the Chief Investment Officer and Head of Options Trading at Convex Asset Management. Noel, welcome back to Volatility Views.
Hey, thanks for having me back. I'm a little offended that I don't have a nickname.
You need a few more appearances. We need to dial you in for on the show. Get a feel.
Just say something stupid and you'll
that also helps. That also helps. Matt,
that's not something you want, man.
Mark is regretting nicknaming himself many years ago. It has stuck all these years later. So sometimes you have to watch what you say as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And we can just summarize the weekend. Markets went up, vol went down. Bam, that's it. We're done. See you next week, listeners. A little bit more to it than that, but those are the broad strokes out there. And the markets are green once again today. After kind of struggling out of the gate earlier today, I think they realized, oh, wait a minute. We're all supposed to be green again. And so now the S&P up about 1/3%. NASDAQ, and everything's up about 1/3% right now. So a nice, gentle rally into the weekend here. Vol, after hanging out around the 15 handle for most of the morning, coming in a little more now, down to about 14 3/4. That puts it down a whopping 6 3/4 points from where it was at this time last week. So Vol, VIX cash coming in nearly 7 handles on the week, listeners. You don't get those very often. So definitely an intriguing week to be talking vol. VVIX back down to a comparatively quiet 103. That's down 22 handles from this time a week ago. But then again, I say comparatively quiet because 103 is still pretty juicy, still pretty frothy. If you've been listening to this show for any length of time, you know that vol outside of the abnormal times really tends to have a range of about 75 on the low end. Once you start getting over triple digits, you have to sit up and pay attention, and it usually tends to top out unless things get really crazy like they did last week, around 125, 130 in that range, and sometimes you go well beyond it. So yeah, 100 is still worthy of note, worthy of paying attention to out there. A lot to unpack. I'll go out to the guest line first because we haven't talked to Noel in a while, not since June 7th. So it's been over 2 months since he's been on the show. Obviously, a lot has gone on since then, including, let's start with the just massive tumult over the past couple of weeks, starting with, the big shock to the system on Friday, then the unwinding of the carry trade over the weekend, and then the quote-unquote Black Monday and the vol spike that we saw, and now the subsequent unwinding of the unwinding and vol coming back in. Noel, walk us through all that at this pretty meteoric vol rise and equally meteoric vol decline.
So I guess it annoys me when people say nice things about things that were probably bad for others, but our take on it was, volatility was elevated going into the weekend before the 5th, so the 2nd and 3rd. So, if you're paying attention to vol metrics and you have like a cross-asset volatility dashboard, I think that you should have been flashing yellow, maybe red. We went red. And, we were kind of out of a lot of our risk-on stuff going into the weekend. We actually sold some volatility that we already were long in VIX calls on Friday. We sold the balance of those on Monday. So both of those trades were much too early. And, it worked out for us. But it worked out for us exclusively for the reason that we were already long a bunch of VIX calls. I might have even mentioned that on the last time I was on the show. So we were able to capitalize on that, and then we kind of faded it from there.
I can't blame you for taking the winnings on the VIX calls when you can, because 99 times out of 100, that is the smart play in VIX, right? You got to take what you get, because usually you get an hour or two to monetize those. Very rarely do you get those long spike on Friday and then continuing to spike into Monday and into Tuesday even. It's easy to undershoot those when these things are so aberrant out there. Aside from that, as you mentioned, your signals were flashing yellow and even red. I think we were even talking about it that week before it at the Option Pit event. It did seem like things were starting to get a little frothy even then. Now that we're seeing vol come in so aggressively, Noel, what are your thoughts?
So I've actually, done full circle on this stuff. I was long vol going into it, sold admittedly too early. And you're right, we did discuss that. So I feel like I'm not talking out of the side of my neck with this because, you're kind of there in real time. And then, so that played really well. We sold aggressively. We sold all kinds of different products and tenors, but net it was a vol sell and basically everything that we could get our hands on. And then because it came in so hard and fast, we actually took a lot of that off and we went back to green just yesterday for our book. And, we kind of have the trade that we had on before this whole thing happened. So, one of the fastest, I should say not one of it, the fastest round trip that I have any, memory of.
So you dump your VIX upside, you got short, and now you're buying some VIX upside again.
Yeah. So we're buying some Jan. We're sniffing around in the Nove market, and we're basically getting long vol again at refreshed prices. And the long vol that we were buying at really the same prices for the same duration in the spring, which was totally fine.
And now you mentioned Nove and Jan. I won't make you give exact strikes, but what's your tenor when you're talking about upside in VIX? Where do you like to hang out? Are you a mid-20s guy? Are you into the 50 and above, the, dare I say it, garbage range? Where do you like to hang out?
So it's really a function of where's our risk and where do we think that vol will be shocked. We can't give exact strikes, but we can just say that it's meaningful if we get it, like last week or week before. We can definitely monetize that. It's not so wingy where we're out there trafficking in the 100 strike VIX calls or something like that cost 15 cents or some nonsense. That you can still monetize those, right? Because the 15-cent call can still go to 30 cents if the VIX goes to 60. But so I'm not saying that doesn't exist. But the problem is that you're not going to get any real liquidity in those really wingy strikes. You kind of have to ride those death to your part probably. But we're out there re-engaging in Jan, mainly because that's where some liquidity is. We still feel like Nove is a bit high, and Oct is obviously very high because of the election. And those trades are not really meant to make money. If VIX goes back to 22 or whatever else, those are more of a hedge so that we can, have really just a safety net in case other things in our book go the way we don't want them to.
All right, interesting stuff. Let's keep rolling around the horn. Let's go back to the Southern Volatility Mecca. Mr. Meatball, vol has been dying pretty aggressively this week. Good week to finally unveil your big SVIX strategy. We'll get to all that fun in a second when we get to the ETPs, but what's catching your eye out there right now in the, I would say slow death, but it's been the rapid machine gun death of vol this week, sir?
Yeah, I got to tell you, I've been shocked at the speed with which the market just said meh to everything that happened 2 weeks ago. The speed with which money raced back in to I'm hearing that, there's been a big increase in yen borrow, like they're jumping right back into that trade. And we've seen Apple go up 10 days. This will be the 10th straight day Apple's gone up. Money's pouring into NVIDIA again. Some of the other names that are, Tesla, NVIDIA, they're getting off the floor. We haven't yet seen the Russell pick up. When the first sign that things were starting to get a little screwy was when we saw money staying in the market but trying to rotate around. So, one day it's selling NVIDIA, buying Amazon. The next it's selling the S&P and trying to buy the Russell. Once we start seeing that money shift instead of kind of call it shotgun buying everything, that'll be a sign that maybe we're a little overstretched. But right now things appear to be, heading straight up, and volatility is in a free fall.
Volatility taken out to the woodshed with the machine gun and just filled full of holes. Mr. Rhoads, the last word is yours, sir, on this week's vol developments. Were you too equally surprised at the just extremely rapid death of vol this week?
Absolutely. I mean, it's I always like to run numbers while everybody else is talking. I want to see if this is the quickest we've ever gone from above 40 to under 15. Because I would not be the least bit surprised if it is.
Certainly feels like it has been. I'm saying that anecdotally, obviously.
lack of recollection, but you guys all know I have a head injury. I can't even remember what day of the week it is sometimes. But yeah, while you guys are talking, I'm going to run those numbers real quick. And I would not be the least bit surprised if this is one of the quickest reversions down. And I do recall a couple of times that we've had recent volatility spikes, like in the last few years, that people have commented that the move back down was the quickest ever, which makes me start to wonder if that's some sort of structural change within the VIX complex, that we spike and come back much more quickly than we used to, because everybody looks at VIX as that mean reverting instrument and is a bit more confident to jump in front of the spikes. As far Mark, Sebastian just mentioned the yen trade. I'm working with one of his favorite professors on some carry trade research right now. Used to be Dr. Miller, now it's Dr. Ademiak, and she's kind of noted that not a lot of people actually exited the carry trade. That it's just that they kind of stuck with it. More so than you would think by listening to the people on the business networks, and that the carry trade probably was not the cause of the volatility. It was impacted by the volatility. But shouldn't be laying blame on our friends over in Japan.
When in doubt, you know the deal. We always wag our fingers at Japan, but so they rode it out. It wasn't
somebody else.
It wasn't an unwind as much as just an endurance, I suppose. They rode it out at the end of the day.
And one of the, Mark, one of the things that actually did, I saw this on Reuters, and I thought it was kind of interesting. I was impressed that Reuters actually had something that was interesting to me, and two, on that, and I'd love Noel and Russell's and your thoughts on this, but on the 5th, when everything blew up, zero DTE has been over 50% of the volume on a daily basis. On that day, it was only about 25% of the volume. So we saw everyone run away from zero DTE and jump back into more traditional options. And then obviously the next day we went right back at it. I'm interested in, whether that says anything about zero DTE and or whether that says anything about future events if they do happen, or maybe how traders are going to start thinking about hedging activities given what just happened.
I'm very glad you brought that up, because I was thinking the exact same thing, even as Russell was talking about it just now, about how this might be the fastest we've seen and maybe points to a structural change in VIX. I was thinking at the same time, this is also really the first one of these events we've seen in the modern zero DTE era. So obviously the liquidity and the liquidity profile in SPX is very different beast than it was even a couple of years ago out there. I didn't see the data point about the same day they kind of ran away from it. That doesn't surprise me, though. I think we all kind of knew when it hits the fan that maybe wouldn't be the place to be. So that doesn't surprise me. But I do kind of wonder if the rapidity of these moves we're seeing out there right now, if that is some lingering after effect of so much liquidity, north of 50% most days, in these major institutional products, migrating into products that live and die all in the same day. No, I was just going to bring this up anyway, so it's good timing. What are your thoughts on what Mark just brought up about the fact that everyone kind of fled from zero DTE when it all hit the fan? And then B, looking back on it now that we have some data in our back pocket for the first time really in the modern zero DTE era, what role, if any, do you think everyone flocking towards short duration contracts had on everything we just saw unfold?
I think that the Reuters article and the commentary is totally accurate. I was looking at it in real time, and I can see all the zero DTE stuff happen as it's happening, and there was a lot less. And I also found it interesting. And if you think about it, it is kind of just the natural progression of things from the Napoleonic Wars, how much you can get to the bond market, and then you go to the floor, and then you go from the floor to the computer, and then you go from the computer to algorithms, and then algorithms to zero DTEs. Everything's happening a little bit faster. So I think whatever the reaction function is for the input is always going to be more swift when the accuracy and the timeliness of the information is more accurate and readily available. So I think it's just kind of a natural thing for it to happen. So I do think there is a new paradigm. I do think that there is a new way to participate either on the good side or the bad side, depending on how your book is structured going into it, so that you can smash things if you're not already getting hammered. Because some of the people that got body bagged by that, they're kind of carried out the back of the hospital. And then the other people that aren't, they can reinvigorate all of their shorts if they want to, if they have the luxury of doing that.
Mr. Rhoads, as our resident data guy here on the show, what are your thoughts? I think anecdotally, we all probably assumed that zero DTE liquidity would be less, but actually crunching the numbers, it was a lot less on the quote-unquote Black Monday sell-off. So what are your thoughts on that? And then B, the impact that you think this flight to zero-day liquidity has been having on these extremely rapid moves we're seeing now.
Back in the day, like actually pre-2008, I did spend some time running a CTA, and the office I was in had a lot of S&P futures traders that were basically trying to scalp or day trade throughout the day. And I am going somewhere with this. As I remember in 2007 on one of the Bear Stearns days where there was a lot of excess volatility in the S&P 500, the head guy just basically came out and said, everybody stop trading. And I wonder if that's kind of the same thing that happened with the zero DTE, where you have people that continuously scalp around those things and trade them like futures day traders, and they realized they should probably get to the sideline with everything that was going on back on the 5th. And then another thing that it's like Dr. Ademiak and I have more ideas than time to work on things. With the increased algorithmic trading that's going on, and a lot more and more and more and more automated trading, those things will shut themselves off during high periods of higher volatility. So I wonder if that's another factor that's coming into play, that the algo said we're going to take this Monday off. So my assumption is the retail traders are probably still in there trying to trade the short dated index options, but any of the professionals that have found some sort of edge over the last couple of years don't want to be trading when you're looking at an environment that we have not seen since we've had zero DTE. So it's not necessarily causation, even though we're seeing some correlation there.
Definitely a take your ball and go home type of day, certainly for the algos and for a lot of the traders out there as well. What do you folks think at home? What do you folks think in the live chat? What do you think about the impact of some of the advent of these products like the zero-day contracts and the rapid adoption of them? What impact is that having on these massive market moves we're seeing of late? I'm curious your thoughts as well as we keep on rolling out there into the land of the volatility surface. We've all been fixated on October since the start of the year for obvious reasons, but the whole curve obviously shifting back down pretty aggressively this week. As we kicked off the show, we had the AUG future down a little over 6 handles, 6.2 handles from where it was this time last week. September down a little over 5.1 handles. So the whole curve shifting down. Can't even sniff a 20 handle anymore, listeners out there. If we roll it all the way out to, let's go all the way out to April of next year, and you're at about an 1830. That's where the curve topped out as of the start of the show. So all those looking for a little bit more upside juice, you have to be content with an 18 handle, at least for this week. Noel, what are your thoughts on everything we've seen going on out there on the vol surface this past week, sir?
It's kind of exactly what we talked about. Things are really kind of back to where they were. And I guess the thing that I would want to think about, or I would want to hear if I was listening to us, is why did we do what we do, and why did I think it was correct? Which is, there's a lot of things that you have to identify whether or not something is systemic and macro, or if it's going to be more idiosyncratic. And to me, this was more of an idiosyncratic event, and which is why we faded it so aggressively, as opposed to something like, COVID, where, it's a global systemic shock and we really had no idea, nor any precedent with that. So things are kind of back to as you were, and I think that is the correct trade. But all of this happened so fast. But going back into it, why would you sell it? I would sell it because if you look at a lot of the other volatilities and other cross assets like bonds, currencies, yield spreads, things like that, it just didn't have the same reverberation. The volatility event was really unique to the VIX and, the knock-on effects of that. So to me, that was something that was more idiosyncratic, which is why we sold it so aggressively. And I guess that's where I would look to clues in the future if I were listening to us today.
A lot to unpack there. We got folks on Twitter out there asking about our thoughts on the massive 14% contango between September and October, starting next Thursday, August 22nd. Well, we're talking about the term structure right now, so you have excellent timing. Who was that? Vernon Griffin out there. So listen up. I was mentioning the 20 handle. If you go back just to last week, listeners, I was just looking at the numbers for last week. You couldn't find anything below a 20 handle with the exception of December. And that was ever so slightly. We're at a 1970 for obvious reasons. December, obviously a very sleepy time for vol. But that's as low as we got last week, a 1970. Now you can't even sniff a 20 handle anywhere on the term structure right now. So it goes to show you how much the curve has just been crushed this week. Mr. Meatball, same question for you, sir. What's lighting up your tape out there? And as our listeners are asking, what about the massive 14% contango between September and October?
Yeah, I mean, I think that is a mispricing. Obviously, they're pricing in an increase in volatility for the November election. But if we actually do have an event, the October contract will be gone, and November is actually going to be the one that will actually engage in if there's actual election shenanigans. So, I mentioned this last week. I like the short OCK long NOV trade as a spread. I have it on. I'm long puts in OCK, long calls in NOV. As it sounds like Noel might have some similar ideas, but I think that is a spread that makes a lot of sense.
Totally. I have the same thing on. I think we talked about it, but yes, I hard agree with that idea.
There we go. And Mr. Rhoads.
Yeah, just let me. Sometimes you move on quickly, but just one little point with respect to the September contract. It expires the morning of the next FOMC. So if you're playing the next FOMC, you're looking at October, and that might have something to do with that wide spread.
That sounds like it. Again, the devil's always in the details with these things, right? And just a few extra hours could make that much of a difference out there. Who was that who asked that? Vernon. So a good question there, Vernon, as we keep on rolling out there into the land of the VIX options. And it's a banger time. And I was just joking about December being a seasonally quiet period, which is why that was the only future below a 20 handle last week. Well, this time of year, listeners, is usually the other time of the year where vol is pretty seasonally quiet. The dog days of summer, all the money managers are out in the Hamptons or in the south of France. They're not at their books. Nobody's slinging vol, and VIX volume is anemic, and usually nothing's going on in the markets, and they're quite thin. Instead, we have the opposite. VIX is averaging now almost 1.2 million contracts a day. That's up another 40,000 from this time a week ago. So VIX continues to just be a rocket ship to the moon in terms of volume and plummeting down to earth in terms of value. Today, actually a comparatively quiet day, only 566,000 contracts. Now, normally, this time of the month in August, that'd be a banger. That'd be, oh my God, that's more than a day's worth of paper. The ADV right now should be like 450. So 1.2 million, you're talking 3x that. That's a pretty explosive environment, at least for VIX volume. How much does it cost you to break into the top 10 right now? 236,000 contracts. Again, that's a ton. Usually you're talking $150, $160 to break into the top 10. 236. It's pretty beefy, listeners. That gets us, by the way, in our top 10 right now. We were talking last week. That also shows you how aberrant last week was. That was the first time that I could remember, well over a year, that we had more puts than calls open in our top 10 in VIX. So let that prove to you the validity of this indicator. When it flips, you got to get short VIX pretty darn quick, because that worked out pretty well, at least for right now. Still heavy to the puts, 4 puts, but now calls outnumber them again. 6 calls to 4 puts. All it takes is a spike into the 30 handle on that front future, listeners, and go figure. People are going to trade some puts again. They like puts much better at a 30 handle than they do at a 12. Go figure. All right, number 10, 236,000 of the D's 42 halves. So right back at it, listeners, at number 10. Number 9, 244,000 of the Sept 35. So still looking lofty. Number 8, 250,000 of, here's our first of 4 puts, the Sept 16 puts. In fact, we got a nice little put strip here. Number 7, 278,000 of the Sept 15 puts. Number 6, 279,000, just 1,000 more of the AUG 15 puts. Then number 5, 340,000 of the Sept 20 calls, so they slip right in there. Then number 4, our fourth and final puts in our top 10 this week. 350,000 of the September 17 puts. A lot of these strikes looking pretty juicy right now. Number 3, 363,000 of the Sept 17 calls. Which side of that options chain would you rather be on, listener? I think I know the answer, but might be a fun little flash pull. Number 2, 372,000 of the Sept 45s. Again, right back to the 45 strike. Number 1 right now, the largest size position in VIX options, 386,000 of the September 25 calls. Intriguing stuff, listeners, as we keep on rolling. Speaking of intriguing, does it get more intriguing than Russell's weekly rundown? I say no, but let's find out anyway.
Now, Russell's Weekly Rundown.
All right, everybody, time for maybe your second favorite part of the show. Maybe it's your first. I don't know. I don't judge. Mr. Rhoads, what do you got for us on a rocket ship to the downside this week?
Next week being August expiration, it's typically a more difficult week to find weekly trades. I got a couple of them, but as I went through the tape, there were very few spread trades, which I was pretty surprised at. Maybe I shouldn't have been, but I was kind of surprised at that. And a part of me wonders if the excess volatility has people shying away from less liquid instruments like the weekly options. So I got you a trade I like, got a trade I don't particularly like that much. Monday afternoon, minutes before the close, somebody sold about 4,300, and this was an opening transaction of the September 4th 30 calls at 92 cents. They expire before we get the next employment number. I don't think there are any huge economic numbers between now and then. So I think that looks like a fairly decent trade. And then one for kind of the same reason that I wasn't a big fan of was on Wednesday with VIX at 1671. Somebody came in and bought 200 of the August 28th 20 calls at 90 cents and sold 200 of the August 28th 25 calls at 50 cents. That's a net cost of 40 cents. I don't, it's easy to say when we've had this dramatic dip in VIX where it's given up over 20 points in a very short period of time, to say I don't really like the long volatility trade, but I just don't see the catalyst. At least when you see the weeklies that expire, like the Wednesday after an employment number, or the Wednesday or the week after an FOMC announcement, you can kind of get an idea as to maybe what they're looking for there. But this one, I just don't think there's any event on the horizon that's going to push VIX back into the 20s. So those are the only two that really made a lot of sense, that I even felt like were even worth mentioning. But a lot of the trades were just exiting. Saw a lot of people salvaging their August 14th puts on Monday and Tuesday, and then actually did see some people get out of some calls that they had owned as well. But those are the only two opening transactions, and I generally like to talk about opening transactions that were worth talking about. And I almost feel like we should have only played my theme song once instead of twice.
You didn't deserve a double
lousy report. But then I also just would like to point out to Noel, once you get a nickname, then they start doing crap like that song to you on this show. I don't want a nickname.
He should be so lucky.
Careful what I ask for.
He should be so lucky to have an awesome theme like that out there. Interesting stuff. No one's bothering. Ain't got no time for spreads this week, Mr. Rhoads. It's all straight vol plays this week. No time for subtlety when VIX is moving 20 handles at a clip. Speaking of moving, the volume, ever since I broke down the numbers just a few minutes ago, VIX starting to spring to life a little bit. 678,000 is the total now, so up over 100,000 contracts since just a few minutes ago. So something popping off out there. Let's go find out, listeners. The big dog today, 55,000 of the October 18 puts. That's interesting. Followed by number 2, 30,000 of the Sept 45. So somebody continues to have a fascination with that 45 strike. I think in the past it has been part of that 1x5. I think it's 20, 45, somewhere in that range. So More action on the 45s and Sept. Number 3, 27,000 of the Sept 14.5 puts. Number 4, 26,000 of the Sept 20s. And rounding out the top 5 today on a more increasingly active day, 25,000 of the Sept 13.5 puts. Yesterday was a banger, listeners. Looks like, actually, it wasn't the top of the week, but it was pretty heavy. 1.26 million contracts, actually. So, again, a hefty week. Everything's pretty much above 1 million this week. And today looks like it has a decent chance of getting there as well. 88,000 was the big dog yesterday of the AUG 14 puts, followed by 86,000 of the AUG 15 puts. 53,000 for number 3 of the August 18 call, so there is some upside action going up there. Number 4, 52,000 of the AUG 14.5 puts, and number 5 yesterday, 43,000 of the August 18 puts. October. People like those October 18 puts. That's interesting. Wednesday, I should say. 1.17 million, so again, a beefy day. The big dog, 58, almost 59,000 of the August 20s, followed by number 2, 46,000 of the AUG 16 puts. Number 3, 35,000 of the October 18 puts. This is the strike of the week here. Number 4, 34,000 of the AUG 30s, and number 5, 34,000 of the September 14 puts. Let me just look for the August. Yeah, they didn't make it into our top 10 this week, but I got a feeling if they keep on this pace, they might be getting there. Tuesday, 1.2 million contracts, so another beefy day. 112,000 of the August 17 puts was number 1, followed by number 2, 83,000 of the Sept 35s. Number 3, 70,000 of the Sept 18s. Number 4, 48,000 of our old friend, the Sept 45s. And number 5, 41,000 of the Sept 18 puts. And then Monday, bringing it, 1.42 million. So the banger day of the week so far. The big dog, comparatively light, only 56,000 of the Sept 35s, followed by number 2, 53,000 of the Sept 19 puts. Number 3, 53,000 as well of the Sept 20 calls. Number 4, 45,000 of the Nov 40s, 4Os. And rounding out the top 5 on a banger Monday, 44,000 of the Sept doubles, the Sept 55s. So a lot of action going on out there this week. It's kind of hard to spotlight a couple that caught your eye, but nonetheless, we shall endeavor to do so. Mr. Meatball, we'll start with you, sir. Obviously, a lot of paper out here. Are you a fan of these AUG 18 puts? I got a feeling you probably are. And anything else catching your eye out there this week, sir?
Yeah, it was a very busy week, kind of across the board in VIX. But yeah, those AUG 18 puts, a lot of kind of SEP and AUG put action, and then decent buyers. We're seeing some NOV call buyers. I like this trade. There's a lot of the NOV 20s going up. And that's probably one of my favorites that I've been seeing trading is the NOV 20 calls. They're right now, the open interest is only about 85,000 on that, but I think that'd be a spot where I'd be building start building a position. Looks like they're all over the 17 calls and the 20s and the 25s in September, and those AUG 18s, I like those. I think that is a nice trade. I'm currently working on flipping out of my 25 puts and rolling to a lower strike. I might actually pick that one
18 might be your huckleberry, sir. I don't know.
I know.
I'm looking at it here.
I mean, I've done really well on those 25 puts, so I'm probably gonna roll down to either the 18s or the 20s.
I'm looking at them here right now, and they've been slowly accumulating these since obviously right after the meltdown. August 6th, they traded 35,000 of these. Actually, they were taking some off that day. Then August 7th, they did 22,000, adding about 7,000. The OI was around 98,000. They did 57,000 on the 2nd. That's actually going into all this madness. 35,000 on the 14th and 43,000 on the 15th this week. The OI right now is at pretty much exactly 100,000 contracts. So AUG 18 puts, listeners. You like those out there? Let's look really quickly to see what they're going up for today. 216 is what they traded for this morning. 215 around that price. You like those? Interesting. No, I don't know how close attention you pay to individual VIX options trades, but obviously it was a very active week. Anything on your radar that you noticed this week, sir?
So that volume today, part of that is me. So I very much pay attention to it. I am doing something similar to what Mark discussed, which is, you buy puts a few days ago, and then you roll them down and sometimes out, depending on where you think you can get the most juice. But yeah, I very much think those puts are interesting, and I'm part of the problem or the solution, depending on how you look at it.
Well,
It's
now I
your
feel
fault.
really smart. If Noel's doing the same thing as me, I know I'm doing the right thing.
You'll have some on by the end of the show.
Or maybe Noel should be rethinking if he's doing the same thing as me.
A little bit of column A, a little bit of column B. Speaking of Mr. Meatball, this is his week to shine because SVIX has been on the rampage yet again. Of course, our inverse vol friend listeners, 3190 when we kicked off the show. It's been kind of hanging out right about there still throughout most of the show. Up a little over 6, almost 6.5 handles, about 6.4 handles from where it was this time last week. Doing some decent paper today, 13,000. The ADV, not surprisingly, has skyrocketed to 23,000 contracts a day. That's up about 6,000 just over the last few weeks. This thing was only doing 4,000 contracts a day not too long ago. So 23,000 is certainly quite an impressive improvement out there. But Mr. Meatball, this was your big, much anticipated SVIX week, sir. So what are your thoughts on what we're seeing out there in SVIX continuing to skyrocket? And then B, if you want to give us any hints, any teases of your big strategy, have at it.
Yeah. So, SVIX, there are definitely better ways to express being short volatility than owning SVIX, but there are not more simple ways to express being short volatility than just buying 100 shares of SVIX, in my opinion. Stop me if you disagree with me. But it also can be a brutal hold if something like August 5th happens. And so my goal in developing the strategy was coming up with a buying SVIX as a stock strategy and having the levers to get someone either hedged when things are starting to look hairy or completely out of the way when things are going to go bad. And so I developed a relatively simple system involving looking at the roll yield and then looking at the momentum of the movement in the roll to gauge, one, what we're doing, how much stock to own, and then two, are we doing covered calls against it? Are we collaring it? Or are we doing what we call a covered strangle, which is long the stock, long the put, and long the call at the same time? And that's the basis of the strategy. If you want, you can or you can follow along with our slightly more complex option trades. But my goal was to bring volatility selling in a smart way to the masses, and that was what we launched this week.
Interesting stuff, listeners. You can, of course, learn more. I know you had a big webinar. Is it available for archive? Can folks go check it out?
Yeah. Just go to I'll put it out on Twitter.
There you go, listeners. If you want more details, and you said the final part of it is a covered strangle, so you're long the strangle and the underlying.
Yeah,
interesting. So
the vol's got to be cheap enough for that trade. And we don't necessarily use SVIX options for that. We may use VXX or UVXY or something along those lines. But generally speak, or there are certain periods when we're completely out of the stock where we just own the strangle, like just trade the breakout like you would have wanted to on, so for instance, our system would have gotten us flat on July 24th. And then we would have gone long into some sort of strangle on July 25th, and that would have paid out really nicely. So that's kind of what that is what we're doing. I just wanted to come up with something that a person with, $20,000 could use to express a short volatility position without having to do all the things that you and me and Noel and Russell do on a daily basis. And that was my goal. I wanted a simple, easy, manageable strategy to bring short volatility to the masses.
Bringing short vol to the masses. I like it. Check it out, listeners. Option Pit U. Just go to optionpit.com to get the full webinar. Mr. Rhoads, I know you've been busy cranking away on SVIX as well. I know you're lamenting you don't have enough VIX puts, but I know you got a boatload of SVIX, so it's kind of half a dozen one, 6 the other. What's been catching your eye out there in this SVIX rampage of late, sir?
Well, to run a number real quick for you guys, I was kind of curious. what the flows have looked like for SVIX over the last couple of weeks. And I think all of us should just give ourselves a big pat on the back that we've made enough people aware that buying things like SVIX on weakness can make some sense. I'm going to go back to the Friday before August 5th. The market cap for SVIX was 207 million. The thing dropped from 3110 to 19 on the 5th. And the market cap only dropped by 11 million, which means there was an inflow of $70 million into that fund on that Monday. Crazy. And over the last 2 weeks, the market cap's gone from 200 million to about 580 million. 218 million of that is inflows, and the rest is performance. So about a half the increase in market cap in SVIX is new money going in, mostly on the 5th and 6th. In fact, the 5th and 6th, the day of and the day after, the net flows was, I got to do math in my head now, it was about $230 million.
Yeah. You just got to make sure that
the market cap went from 196 to 391, and it was almost all attributed to inflows.
What's the breaking point? What's the volume in VIX futures that where that breaking point where it gets too big? I don't think we're anywhere close to that level.
We're not anywhere close to that.
Yeah.
But if they hit that point, they'll start using swaps.
Okay. Yeah. But so I don't think we're anywhere near there. But that market cap gets over several $1 billion, then my ears are going to start perking up.
Noel, same question for you, sir. You pay a lot of attention to the inverse vol products, and if so, any thoughts on what we're seeing out there in SVIX land right now?
Yeah, I pay a ton of attention to them. I've been trafficking in really in the vol products, just VXX, and I actually had a question for Mark regarding SVIX versus VXX and how they're functionally different other than they're inverted. And the only other thing I've been doing really today is doing gold. I guess just get a shout out to gold and gold vol. Gold is an all-time high, and gold vol is 16, depending on your tenor, and that's something else that's going on. But I was curious what Mark's thoughts were as to why do you think there's edge in one versus the other?
Well, so if you ran a pure straight dollar strategy, short VXX versus long SVIX, you'd get outperformance being straight short VXX. So I believe there actually is a trade where if you short SVIX and short VXX and keep those dollars even, you actually make money. But I wanted something. Sometimes the most profitable strategy is not the best strategy for an individual. Buying 100 shares is much easier than managing a short portfolio for 99% of the retail trading public. And I wanted to create something that was profitable, that would make people money, that was also digestible. And that's why I decided to go with the slightly less the slightly worse version of short vol versus like running a short VXX strategy, because most people would be able to grasp it and manage it and be involved in it. Does that make sense?
It makes a ton of sense. And I think it's a really good answer.
Well, thank you.
Let's keep rolling with this love fest here for vol as we are coming up against it. Let's go out to UVIX listeners, the other side of SVIX. Looking pretty anemic right now, 430 down a whopping 3 handles from where it was this time a week ago. Also putting up the numbers today, 23,000 against an ADV, which is also skyrocketing, up 4,000 more this week to 33,000 contracts a day. So that's looking pretty active. The big dog out there today, we have the 2,500 of the August, so expiring today, 4 half calls. So good luck to those. Those are opening out there this morning out there. So UVIX continuing to unwind. Mr. Rhoads, give us an update really quickly here on your endless saga that is the weekend trade. A rough one last week, but you probably made up for it in the SVIX, sir.
It was down 19 cents. I think it was 19 cents. I think I actually matched the close last Friday and the open on Monday. But I'll keep throwing it out there, and like you just said, it is it's matched up with the longer term holding with SVIX. Typically, what I've done with SVIX is I'll sell calls. I'm kind of hanging on to it now and just doing that UVIX thing in conjunction with it. And for those that are like, what the heck are they randomly talking about without explaining themselves? I kind of found out a while back that if you always bought UVIX on the close on Friday and sold it on the open on Monday, that you'd lose money like any kind of hedging transaction periodically, but you would more than make it up on days like August 5th. And I got very fortunate that I started trading around with it in early July and caught, it could have been months before I actually caught one of the profits on that thing. But I'm going to continue to, when something's working, you keep doing it. And I'll buy my UVIX on the close today and then make sure that I'm up and ready to sell it on the open on Monday as well.
Mark was talking about VXX erosion versus SVIX. Let's jump there really quickly before we get to the crystal ball out here. VXX 45.5 right now, down a whopping 13.1 points. It was actually down more earlier today. It's getting a little bit of its luster back today, up about half a point right now on the show here. Put up 23,000 contracts today. That's actually looking light compared to the ADV, which is 47,000. That's actually down 1,000 over the past week. It's the only vol product we have on the list that actually lost ADV over the past week, which is kind of interesting. We did talk a few weeks ago. Somebody came in and scooped. It was on August 2nd. So right before all this madness, they scooped these 40 puts in VXX a couple of thousand times. They paid $380 for it. I remember at the time saying, I like the strike, the level they paid. I think it was like a 90-something vol. It seemed pretty juicy to me at the time. And that is bearing fruit now because obviously VXX has come back to earth, got up to about a 60 handle, and now right back down to about a 45.5. These puts are only trading about 450 right now, listeners. So not as great of a do as you might think. They're still open. I mean, they're looking good. But when you pay a 90 vol and it's trading like a 68, 70 vol right now, that's even if you get a huge delta move, it takes a lot to overcome that vol. So when you pay through the nose for these things sometimes, even though the strike looks nice, and if they hold them all the way through December, I'm sure they'll be looking okay on this. But maybe not the banger that you thought out there, listeners. But you know what always is a banger? It's the crystal ball. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the portion of the show where we all attempt to wrestle with the vol gods for the coming week. VIX getting a little bit firmer as we're coming into the tail end of the show. We're at about a 14 3/4 right at the start of the show, at about a 14.91 right now. So slightly firmer, but nothing crazy out there. Spoiler alert, no winners this week, listeners. It was myself, it was the Meatball, and it was Mr. Rhoads last week. I was at a 20 and about 20.28. The Meatball was doing his palindromic best at 22.22. Mr. Rhoads was the closest, and by closest, he was the only one with a teen handle at 1967. So, no winner chicken dinner for us this week, listeners, which means Noel, as our guest, you get the dubious honor of going first, sir. What are you feeling for VIX Cash this time next week?
Well, between NVIDIA and Jackson Hole and just everything that's happened, and when we have just the additive part of the geopolitical stuff, I take the over on this stuff. I would say solid 16 or higher.
So you want a 16, and you want everything above 16? 16 and above?
I shouldn't say and higher. Let me backtrack on the and higher. 16.
16 even, okay.
Or slightly higher. I think it firms up.
We can do that for you. I don't know if I can give you everything north of 16. That might be a bit much. Yeah. All right, Mr. Rhoads, as our next closest, you get to go next, sir. What are you feeling for VIX Cash next week?
I started to do a palindrome, and I can't do that. 17.25.
Do you want?
I think a little bit of concern. We got some stuff going on. We've got the Democratic convention. Everybody's very excited about a good possibility that Trump's not going to win this thing. I wouldn't be surprised if people start to think that maybe it's more of a toss-up after the convention, because I don't think a lot of people are fully familiar with Kamala Harris, and I think some people may turn on her after really getting a good look at her. So I think a little bit higher next week.
Yeah, you mentioned you don't know if there's any vol catalyst to the upside next week. When the city's burning, that might be a vol catalyst.
Oh, come on. We had VIX in the teens.
I know.
And I was down there grabbing things from the Gucci store.
I'm joking. I'm just kidding out there. All right, so I get to go next out here, listeners. A little bit of grim humor here to end the week. Yeah, I'm feeling a little bit higher. I'm not going to go the Noel everything above 16. I would like that. I'm going to try that one of these days. I should have been doing that all this time. Everything above this level is mine. But I'm going to say a little bit higher than we are right now. I'm going to give Noel a little bit of wiggle room, though. I'm going to say 1565 for next week. And Mr. Meatball, you get to go last, sir. What are you feeling for this time next week?
Well, since everyone's going higher, I'll go lower. I'm going to go 1441 in palindromic fashion.
In perfectly suitable palindromic fashion, Mr. Meatball at a 1441. Get your guesses in on the pro chat if you're listening live, listeners. If you're listening after the fact, get them in. Questions at theoptionsinsider.com. Get them in by the end of the day when the podcast goes live. It's the only fair way to do it. Then if you're within a tenth of a point, a little bit easier now that we're back in the low teens as opposed to the threatening a 30 handle. A little bit easier to hit that sweet spot. Get them in now, listeners, and you too can win fabulous prizes. Unfortunately, that music means that's going to do it for us. If you're on the on-demand side, the podcast side, that will conclude your broadcast week with us. I want to thank you for joining us throughout the week. If you missed anything, a lot of great stuff for you to check out. And if you're on the pro side, if you missed that pro Q&A, check it out. It was an awesome one. We got deep into a lot of this vol fun this week. So you know to go to find all that, theoptionsinsider.com/pro. That'll also get you behind the velvet rope for Options Oddities coming up in about an hour. Should be a banger this week, listeners. If you ever tune into Options Oddities, this might be the week. I'm just saying. Fun stuff afoot out there. Let's go around the horn. Noel as our guest. No music, no nickname for you yet. And we can't give you an entire range for vol predictions yet. But we're working on that fun. A few more appearances maybe, and we'll see if we can narrow something down. In the meantime, if folks want to check out what you have cooking in the vol space, sir, where should they go? What should they do?
Sure. My Twitter handle is @NoelConvex, and then our website is ConvexAM, like ConvexAssetManagement.com.
There you go. Check them out, listeners. ConvexAM on a Twitter machine near you. And Mr. Meatball, once again, if folks want to check out your SVIX webinar, where should they go? What should they do?
Yeah, well, let me give Noel a little plug. He's got some good white papers there on dispersion that I had my interns go through, and they loved it. They're college math majors, so they were enjoying the papers, Noel. So I appreciate you putting those out there. Go follow me on Twitter @OptionPit, and you can go to my website, optionpit.com. We're putting stuff out there just about every day, so come check us out.
And Mr. Rhoads, last but not least, I saw you put in the chat. If you want to hit on it really quickly, we got like a minute or two about your UVIX underperformance. Have at it, and then if folks want all this good stuff in more detail, where should they go? What should they do?
Just at my Twitter handle @Russell Rhoads, just my full name, 2 L's, RHOADS. If you do RHODES, you get some news anchor down in Tampa, Florida that's got a couple of DUIs. That's not me.
And if you have any last thoughts on UVIX, really quickly, underperforming.
Oh, sorry. I thought you were trying to rush me up. I put in the chat. I had a secondary thought as we were wrapping up. If we're going to see this really steep contango with September, October, that's not going to be good for the long ETPs. I think sometimes we forget about the impact that can have. So just something to keep in mind if you're looking for ways to go long VIX going into the fall. If you've got a really steep contango, you may want to look at the spot market or the VIX futures and VIX options as opposed to maybe the long ETPs.
Yeah, go straight to the source as opposed to the Franken products. In the meantime, listeners, check him out. Russell, 2 S's, 2 L's. Don't check out the drunk driving guy. Check out the actual source. That is going to do it for us on Vol Views this week. That will do it for us on the on-demand side as well. Back again in a little bit for Options Oddity. Should be a banger. And then back again on Monday for the option block all the way through to next Friday. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.